Welcome to a new episode of the Opening Bid Unfiltered podcast. I'm Yahoo Finance Executive Editor Brian Sozzi. Like I always say, this podcast will make you a smarter investor, period. And a lot of smarter about portfolio construction and markets. In this episode, Jose Minaya, Global Head of BNY Investments, is here. Good to see you.
Good to see you. Thanks for having me.
Yeah, so I think before we can even get into what you do and how you do, I need to get your assessment of the markets at this point in the year.
You know, I think not much different from the beginning of the year, right? We've been pretty consistent in that there's a lot to be constructive in the markets, right? It's like if you think about, we just went through, a set of earnings, what you're seeing with unemployment, what you're seeing with the Fed being more accommodative, all that continues to point to very constructive markets. At the other end, the list of things that can go wrong on the tail end just continues.
It's off this table.
It's just, it just continues to add up to the list. So again, I always say you look at these markets and it's like very constructive. There's a lot of reasons to believe that'll continue. Yet you do have to kind of figure out, how do you cover your flank? How do you deal with the fact that tail risk is probably the highest it's been in my career?
When you talk to clients and you're traveling around, what makes them so excited to own stocks at these higher valuations?
Well, I don't know that I'd use the word excited. Again, they look at these markets, and anyone who's also felt the pain of what's it been like to kind of not play this market, right? Like I think it's a very risky thing to say, I'm going to be risk off. What does that really mean? I think these markets have taught us, no, as an investor, you need to be risk on all the time. Now, the real question is, how are you mitigating or how are you diversifying your portfolio? How are you thinking about outcomes? So I think that thinking from clients, it was just about like, are you going to put me in large cap, mid caps?
Seven stocks known as Mag 7?
Yeah, the Mag 7 versus now the real conversation from clients is more and more around outcomes and say, look, I know I'm going to be invested, but help me protect myself with these different situations, or here are the outcomes I'm looking to generate.
What are you telling them in terms of protection?
I go back, and again, it sounds pretty simple, to that old diversification story. And diversification used to be this 70-30, 60-40, stocks, bonds. I think it's a lot more complicated than that today. Today, it's about, well, can you find ways to protect your principal? You find ways to develop specific yield that you're looking for. What's the duration? What's your timing? So for us, it's around constructing portfolios, bringing in alternatives and other things. It might be bringing in guaranteed income. Again, that basket of different kind of investments that gives you the right correlations, right? These were all things that were highly academic, and everyone nodded and said, yeah, we get it. But when markets were all just going up at you could buy beta really cheaply and it was fine. I think that storyline's a little bit more complicated,
What do you view as alternative? Because when I used to think about alternative investing, I thought, all right, some real estate, private markets. Do you consider crypto as alternative?
Yeah, do I consider crypto? I guess maybe technically, I think about alternative investments really more tied back to correlations, right? And it's not about outsized returns. It's around saying, okay, is your portfolio protected against inflation or the ability for inflation to kind of show up and come back strongly? What about equity volatility? What are the different things? What are the outcomes you're trying to get? What are the assets that you can come in that give you that positive correlation? Not like if I think about crypto, right? People are looking for outsized returns, exposure to a particular theme. Those are traditional investment strategies. There's nothing wrong with them. But thinking about what is the outcome I am concerned about, or what is the outcome I'm trying to generate, and how do different asset classes play in. So if I own real estate, it's not because I think it's a great time to own real estate. I think it's just how it plays a part of my portfolio.
What's one of the, I guess, biggest tail risks you see to these markets? Is one, I've been thinking a lot about this lately. What if the Fed doesn't aggressively cut rates next year? What if suddenly we really start to worry about the U.S. debt situation and yields go up? I got a lot of worries in my head.
Obviously, like I said, the list of concerns is pretty long, geopolitical, et cetera. But I think the policy one is a big one because, I don't know, when I went to school, things around, watching rates go up as high as they did, or cuts of what we saw with inflation, these things would have been kind of Armageddon type of situations.
That's true.
So it's hard to look at today and say, well, the yield curve gets inverted. Like, okay, are you supposed to care about that today? Okay, you look at debt and balance sheets today. Well, are we supposed to care about that? What about modern monetary theory? All these things that, again, the old models don't necessarily apply anymore, right?
But why do you think that's the case?
I partly I think is demographic. I think the economy has become a lot more global than it was, 10, 20, 30 years ago. I think demographics have changed as well. I think technology is kind of plays a part in all of this. And also, I think governments have played a broader part in these kind of quote unquote free markets. So there's a whole host of things that I think are slightly different and more engaging that has kind of changed that narrative.
How did you get here?
How did I get to this studio?
Job, studio. How
Oh
how
man,
do you get a position like this?
I would say mine was not the most direct route. I grew up in Washington Heights. I'm the son of first immigrants from the Dominican Republic. Baseball was a big part. I went from I'm going to be a pro baseball to the point that I wasn't going to be.
How far did you make it?
I got drafted. I played a little minor league ball. But it's the humility of you go from being the best at something to literally not even belonging on the team. And then you say, okay, I'm going to start over. I went to school and then I was like, oh, I was going to be a Marine. And I went to officer candidate school in the Marine Corps and, then realized that's not what I wanted to do with my career either for the long term. I just happened to find myself on Wall Street. I was good at math. I asked around, what do you do when you're good at math? Finance came up.
Spreadsheets.
Yeah, spreadsheets. So I picked up breadcrumbs along the way, but I think what really got me to this role was after picking up the breadcrumbs was kind of really a shifting of focus around what do I want to do? What am I passionate about? That moved me from the sell side to the buy side. That moved me to, launching a agriculture and natural resources fund, which again were things that I wasn't very heavily trained on. It was just very interesting, the thematics of it, the people that I met. So again, I started by picking up breadcrumbs and then I immediately shifted to the things that made me passionate and what I wanted to get up every day. I went back to that athlete that said, hey, I would go to bed in my workout clothes to get up at 4 a.m. and I couldn't wait to do it.
I really relate to your story because I've had to pick up a lot of breadcrumbs in my career. I started as a stock analyst, but nobody really guided me to get to that. I had to put a lot of pieces to the puzzle together. Who are your mentors, as you went through this journey?
I've got so many mentors, and I would say though, I feel like every stage of the way there was somebody there, right? Whether I could count my family obviously as like my first mentors and my parents, but they weren't educated. There was only so far they can take me. Then it was people, the dean of the business school, Manhattan College, was a mentor to me. And again, I count mentors. There were a handful of people. They just took a genuine interest in me. I think I was early on. I was very good at kind of understanding when someone was taking an interest in me. And I was also very good at investing in that relationship and not just having them help me, but me giving back to that relationship along the way.
What do you tell folks that you may be mentoring now? How do you give them some breadcrumbs?
The breadcrumbs, I try to keep it very simple, especially people coming right out of school. I would say, look, this is the easiest your job's ever going to be in your career, meaning do the little things really well. I speak to so many people now coming straight out of school, and they're asking me, when am I going to travel on deals? When am I going to work on the
Hold on, buddy. Hold on a second. Like, you got to,
it's like, hey,
time.
It's like, hey, the reality is no one's going to give you these big responsibilities. But you know what? One of the things I did, and I think I did it subconsciously, is it's like, well, someone said, go make copies. Well, I know how to do that. And I can do that. So it's just being accountable, doing the little things really, really well. And then the second piece goes back to relationships and along the way, invest in those relationships. Because sometimes you think what gets you ahead, it's that most direct correlation of, I got to make my boss happy. But your boss has peers and they're watching as well. And your peers are watching. So across the board is how far you cast that halo or that shadow, I think is also equally important.
How do you see how has Wall Street changed, compared to when you first started and today? I mean, there's some central planks, building relationships. You still have the spreadsheets. Now I guess people are using AI chatbots to do deals and scour SEC filings, but what changes are you seeing?
Yeah, I think I keep saying that the next 5 years is going to bring in more change than I saw the previous 20 years. I look at what the value add for me was I'm going to do the grunt work really well. I'm a math guy. I'm going to do the cash flows really well. I'm going to pick better stocks than the next person, and that's really going to be what's important. More and more today, technology is at the forefront. How quickly and the ease that you can do these things. It's all of a sudden like, yes, performance is important, but it's table stakes. how quickly you're able to accommodate clients and moving assets from one place to the next very quickly, how easy you can accommodate customization for our clients. These are the things that are the tip of the spear today. And I think for folks like me, we've had to adjust because it's no longer just about like, look, I got the best factory for you in making these widgets and they're pretty true and tight. They're like, okay, that's great. There's at least another 50 people like you. Now, how are you helping me on these other things in terms of making my life easier?
We're a dying breed. But you know,
Yeah,
I think what
right.
sets us apart is like, and dying, I mean, like we're not dying,
Yeah.
like relationships. I mean, how
Yeah.
you really have to think, I think, more on how to set yourself apart.
And you have to be willing to reinvent yourself. I was telling Robin Vince, our CEO, I was telling him recently, one of the things I've loved about being at BNY is like, it was probably over a decade since I was walking into rooms learning again. Typically, I walked into any room and I was the subject matter expert. Now I'm talking tokenization, custody, payments, treasury. And by the way, these things matter, right? They make the world go round. And again, but it's all a learning environment. That's fun. The whole part of being at this stage in your career and being able to reinvent yourself and continue to learn, that just makes things fun.
You, before I go off to break, I should mention, you work at a very special place. What is it, America's oldest bank?
It's the America's first bank.
First bank.
It's the first company ever traded on the New York Stock Exchange, so the first public company. The founder was Alexander Hamilton. The first clients were Elijah Hamilton and George Washington.
Wild.
It's pretty cool to be on our floor and going through all the, the first warrant and all these things. But I think also when you fast forward to today, BNY touches 20% of the world's assets, right? Almost $60 trillion. It clears all the treasuries for the United States. It custodies over 80% of the digital assets that are out there. So the ecosystem also is tremendous. And in our ability, I think why the firm has done so well in the current leadership is its ability to break down these silos and go after truly an entity that touches a fifth of the world's assets and has such a broad ecosystem.
All right, hang with us, Jose. We're gonna go off for a quick break. We'll be right back. All right, welcome back to Opening Bid Unfiltered here at the NASDAQ in Times Square, having a fun chat about markets, a little bit of life with Jose Minaya, Global Head of BNY Investments. So you've been in this position for what, a little over a year?
Just about a year and a month, yeah.
Where is so I imagine for 6 months, you're getting your feet wet, you're meeting your team members. Where are you aiming to put your mark on this legendary business next year?
Yeah, I'm at a really exciting stage of kind of like that process of starting a new role and a new job. When I first joined, I was itching to go. My boss, again, Robin, he slowed me down, saying, hey, you know what, you should listen more. Trust me, this is going to be the right thing to do. He was absolutely right. You kind of go through these cycles and building a new team, that's not always easy, but it's also very gratifying. I think where we are now is like, there's a vision in place, right? So you kind of set the tone. We're leveraging off the fact of who BNY is, right? 240 plus year old organization. But again, just hitting its stride, right? It's amazing to see the performance of that firm while I've been there, before I just got there, but it's all been relatively recent with new leadership. So I think where we are now is momentum is there. I've always said that the most difficult thing of going into any new role, and what I concern more than anything, is winning our people's trust, right? Without trust, you can't lead people. And I do feel like, the cascading of our message and what we want to do across our people, it's really gone really well. There's an energy at the place. And if we have our people and our culture behind us, the kind of strategy is almost secondary, honestly.
I mean, you came into BNY from what, Nuveen?
I was the CEO of Nuveen.
So yes, so you had a resume, strong track record of performance. How do you build trust as a new leader inside of an iconic company like this?
Well, I think for me, and again, different things work for different leaders. For me, it's always been around empathy, right? Leading with empathy and leading with transparency. So on one end, I want to make sure people know I'm behind them. I'm going to give them a lot of autonomy. I'm going to have a lot of accountability, but you're going to have a lot of autonomy. But so much of it is that empathy, meaning, can you put yourself in people's shoes? Do you understand where they're going through? Change is hard, right? And change is not only hard, it's constant. But when you're going through a transformation, it may seem all-consuming to people. And everything from parts of the organization that are extremely excited to others where they're extremely threatened. And that ability to bring people together through that and being very honest with them, but also again showing empathy of kind of like you understand where the organization is and where people are going through.
This comes at a very, it's an interesting time for the American worker, the global worker with the AI push. Now, BNY is investing billions of dollars, in technology. Two-pronged question, how is AI changing what you do internally in terms of running a financial services organization?
You know, what's amazing about AI is just the speed of adoption and change, right? Meaning, I feel like every month it's changing how we're using AI and what we're doing with it. But what is no longer a debate is the AI is going to be transformative for our global economy and planet overall. I think what's also very clear is if you believe that to be true, which by the way, before was a question mark around what is this AI, how quickly is it going to come? If you believe that to be true, then you also have to believe the firms who can invest in this are going to be the firms of tomorrow. So you're seeing our entire dynamics. You're seeing a lot of consolidation in the industry, all of it driven towards this is the new tip of the spear. And it's hard to, it starts with, I can read documents a lot quicker than I did before. I can be more productive, to all of a sudden, am I adding more value add type of activities in terms of our ability to kind of decipher between two securities or ability to hire talent in a better way. But again, what is amazing, right? I didn't even know what a digital employee was until I joined this firm.
I love they're now called
digital employees. Yeah, we have over 100, and I'm sure it'll be 10x that in the next year or two. But you know, these things sound a little hokey and weird, and then you experience it and you go, wow, this is real value. This is going to be transformative. It's an opportunity, it's a threat, it's a challenge all wrapped up together.
How will these digital employees change the business of managing people's money?
You know what I believe is that people using AI, just like people using technology and agents or whatever you want to call it, are going to be better than people not using it, right? So it makes the process, like a lot of different things, more efficient. And if you make it more efficient, you optimize the outcome, right? This is not just about cost cutting. The ability that you can process information better, you can hire people easier, you can see more than you saw before, should lead to better decisions.
Will AI, I mean, do you view AI, I imagine it's going to change how you build a portfolio. Will it cause unnecessary risks in the market, like overcrowding in, let's say, the Mag 7 or other parts of the market? Because everybody's in the same trade or being told by this bot that they need to be in it.
I think like every technological advancement, including the internet, TV, radio, these are all things that have brought through disruption, right? You can go back and read articles and stories around when factories were kind of coming in place and people literally doing sabotage because it was threatening in terms to the employee force. So I think there's no question that, whether it's ethical parts of it, socioeconomic issues around this, there's a moment here where there's some disruption and adjustment. But what's happened with every other kind of advancements we have is there've been better outcomes. There's been better quality of life for society coming out at the other end. I truly believe this is another one of those things, yet where, I forget how many years the radio, the TV took with hundreds. Now you're dealing in months, years, weeks. It's just the adoption of change is that much quicker.
Before we go, we always love to get a hot take from our guests, about 2 minutes, nothing planned, but this is something that I've really been thinking a lot about. It's been a tremendous year for the stock market, notably 7 stocks. But if you have not been invested in stocks, you may not be feeling this wealth. How do we get that transition mechanism going from the wealthy to folks that may not have much money in the stocks? They're feeling good. Like, what has to happen?
Yeah, and by the way, look, and there's one thing that maybe hasn't happened quick enough, but it's been in process for quite some time, right? If you think about when I talk about demographics and what's even happening in our markets today, think about the retirement markets, right? The individuals who own stocks today are more diverse in terms of who they are, where they come from than they were 20, 30 years ago. No question about it. Is it as diverse? No. But again, technology is playing a part, right? This idea now around 401k, you're even hearing about alternatives coming into 401k, all these things that you may start getting worried about. Well, is the transparency there? Do we have enough regulation around it? These things will come, but at the end of the day, I think it's technology that's kind of helping create the ability to get more of the everyday individuals kind of invested in our markets. Who's invested, like I say, who's invested in our markets today is what drove kind of a more passive kind of push to markets. The active is always going to be there, but how this is growing now and what you need to kind of manage people's portfolios is changing dramatically. So again, in some cases, maybe not moving quick enough, but you see that that's the path we're going towards.
How could someone begin their investing journey? Let's say they're in their early 20s, they have heard that, wow, the stock market is at records, I can get rich too. Like, what should they even do today?
You know, being in this industry, you know, obviously I get a lot of friends asking me that question, you know?
Sure.
And you said that word, it's like, a lot of times the question is coming from like, how do I get rich doing this? Or heck, I remember sitting in business school and people were day trading during class, right? That was a whole thing. That is not what I tell people and folks, right? It's not a get rich thing. Again, when you asked me about alternatives before, I'm like, it's not about outsized returns. In some cases, some of the best opportunities out there are like 4% return driven strategies. It's to tell people you have to think about now your outcomes and your retirement. And by the way, a lot of this is tied to being part of this growing economy, right? I often say, well, should I get in or out of the markets? I'm like, well, getting out of the markets, if you are right over the long term, I don't think it matters I don't think cash or gold are going to help you in a world where in the next 10, 20, 30 years, the markets don't kind of materialize. That's right. It's society. It's how we build. So for me, it's telling people, like I tell my kids, go invest in your 401k, put in the max, they tell you, be diversified. It's not about large cap, mid cap. It's not about the Mag 7 or these other things. It's about just kind of be in that market and then understand the outcomes that like being in the market get you and the different options that are affordable to you.
Do they know how lucky they are out of this industry? I mean, come on, that's good.
Well, you know, I hope they do someday, but they don't tend to listen to me that much, as much as I would want them to listen to me.
Well, it's good it's good to see you. It's been a while. Jose Minaya, Global Head of BNY Investments. Good luck on your journey at BNY.
Awesome. Thanks.
All right, that's it for the latest episode of Opening Bid Unfiltered here at the NASDAQ in Times Square. Continue to hit us with all the likes on YouTube and all the podcast platforms. I appreciate the love. It makes me better at doing these interviews. We'll talk to you soon.